Rohr here with an early, concise highlight on Friday, June 5th. It's currently 5:45 a.m. U.S. Central Time. Coming to you a bit earlier than usual today because we wanted this very critical update out well ahead of the U.S. employment number. And it is especially important overall what the govies do now, and in that regard, the German Bund, which has been leading the others around. So, what does all this mean to the markets? And the answer is, looking at our hourly chart of the S&P future on the left, 30-minute on the right, that the market started to anticipate the potential for more weakness in the equities. That was mostly coming through from Europe on Thursday, but then also a bit later on in the day was apparent in the U.S. after the early holding action back around 2100 again, which is a key old congestion area. We know of late it has had leakage, such as on the opening going back to last week Tuesday, coming back in from the Memorial Day holiday weekend, 2096.20 low. Then again coming back in on this Tuesday, the market ranged down to 2097 after having been near 2100 on Monday coming in this week. Well, finally, a bit later on in the day, in the lunchtime, the market breached 2096, but was squeezed back above it by the close yesterday. However, this morning, the June S&P is off $6, down at 2093 again. And of course, whether it's good or bad from this sort of area is going to be important after the U.S. non-farm payrolls today. Not only is 2093 a key support, and if you're much below it, you're staying below this entire higher trading range. We'll go into that in the intermediate term charts, and next support might be as nearby as 2090 to 2088. But you have to wonder if at new lows for a week on a Friday after a major number, if it even gets to those levels, will it hold? If not, there's some interim support down around 2081, but the next bigger lower supports are back into the 2078 to 75 area. Now the other thing we'll note is a bit of burden of proof on the bulls because the hourly MACD, even though it was a relatively orderly sell-off yesterday, managed to work its way down below the lower runaway band. So there's a bit of burden of proof on the bulls today to put the S&P back up above that 2096 area it's trading below overnight. And of course, we'll know about that an hour before the opening when we see the non-farm payrolls number. Now, the other thing to keep in mind is that the September contract is trading $7 below classical, $7 discount to the lead contract. So any of you who are already trading September, just subtract $7 from any of these levels for your key indications. So if this is 2096 in the June, 2089 in September is going to be your key area, and the other levels adjusted as well. That pretty much does it for the short-term view of the S&P 500.